Good afternoon and welcome to Options Tender. It is Tuesday pre-FOMC. We're going to talk about what might be going into the Fed announcements and also CPI in the morning. Tomorrow should be a very volatile day going into the next couple days perhaps as well. And I'm going to show you, I simplified the scenarios. Apparently there's a little bit of confusion, and I also want to clear one thing up, and that's, the hardest part about trading is knowing how price is going to get to your targets. If they get to the targets, very difficult on the lower time frames, but we've been steadfast on our upper targets. How it gets there with what kind of small dips. We've been buying the dip. That has been the plan. Now we're going to reverse our psychology going into FOMC. We're looking for a top. Okay, I know that it might be about 100 points away, 10 points on the SPX, 100 points on SPX, and 10 points on SPY. So sorry if that was confusing. 10 points on SPY, which we'll be showing you. So we're going to go through the weekly down to the 65, and we're going to check out VIX and go around the horn with the other indices as usual. And so anyway, if you're new here, go down to that bottom right hand corner, hit that Options Center logo, and subscribe. We do these videos often, so I can kind of talk you to all the information that is given from the market and see how we can interpret it and be able to trade it, because the important part is to make money off of trades, not to be right on where and how things get to a certain target. All right, so also I'm doing this intraday about noon. I'll be doing these videos anywhere from noon to 2 o'clock. If you want to get these videos intraday, just become a supporter. It's only $1.99. Go down in the description for YouTube membership. Thank you. Now let's jump into it, guys. We have SPY on the weekly time frame. Now, I don't know if this is a premonition of what is going to happen, but this does not exist right now. This is a spike that did not happen. We have not cleared the highs from last week here. So on the lower time frame, you'll notice that we haven't gotten a new high yet. This is a fake spike here, but that could be the future. All right, that's going right into our confluence up here. We're looking for the 545 area, and I drew out, we'll go through on the daily time frame, the two scenarios following our top. And I'll talk you through this, okay? So I do like to tell people, play this at 1.5 speed if you want to get this whole video quicker and you're ready to watch the next video and compare and contrast all these things. So anyway, we're above the 8 EMA. This is our momentum indicator. We're bullish on the weekly. Trend is up still. Let's go down to the daily. We have, let me do the Elliott wave picture. On the weekly, if we get to the next target, and I'm going to move this to fit our other scenarios. If we go to get that target up here at 560, that's our alternate scenario at this point, because I want to simplify things for you guys. Okay, so this 20 EMA is going to be super important whether we hold it or not. And on the weekly time frame, I'll go over this over and over until you get sick of me doing it. We held it all of these times. It took some a market structure to get there. We got below it, but we got back above it. This is going to be, on the weekly time frame, this is going to be our most important thing that we're looking at. So when we get our reversal around 545, I'm still looking for. We'll see how price action acts with this 20. We get underneath the 20, we're going to remain bearish until any positive signs resolve themselves, okay? So I want to keep a certain trading mind frame. We're looking for a reversal. We'll see how we react, but if we get under this 20 simple moving average on the weekly, then we'll play that as our bearish indicator. So I think we'll test it at minimum and then see new highs, or we break down from it and we play this bearish until otherwise noted. All right, let's go down to the daily, see if we can kind of map this out for you. First of all, we'll do the traditional technical analysis. Daily trend is our friend. We have this wedge that's been playing out forever, and we're looking to get to the top of this wedge that's right around that 545 area that we're talking about, the confluence of a couple different this is a very important one here that's from 2000 top and also 2021 going into 22 top. So we're looking to possibly get into that area and then break down from the wedge. Okay, that is what I want to concentrate on, is that I think we're going to break down from the wedge. Okay, if the wedge holds, then you got to remain bullish, but then something else is going on and our target's much higher after that at 560. So I think that our likely situation is that we test the top of the wedge, 545, break down from the wedge, and then we'll talk about what happens after that. But we're going to be bearish. That's going to be a sell signal. Perhaps we make that reaction off the 20 and back test and go lower. Okay, that's how I'm going to play this. I'm switching to a different mind frame. It will I'll be able to interpret it with the fundamentals, and I'm not a fundamental type of person, but only with the FOMC. Only when the Fed pivots, that means there's something wrong with the economy. So we will have an alternate plan. We're gonna look for this top, so we're above this 80 EMA, we're holding it. I think this is going to hold for the minute. If not, we have right underneath it the 20. But either way, I think that our last move resolves up here at 545 zone. Okay, so now let's look at the alternate scenario. Alternate scenario says that this is an ending diagonal. I'm using this old expanding diagonal. So it doesn't matter how you count things. As long as you create your structure from Elliott wave using the rules, you're going to have 20 different Elliott wave people saying the different things. So as of right now, the structure, we're looking for a 1, 2. Wave 3 is in. Wave 4. And now we're looking for this A, B, C resolution into our target at the 560 zone. That's our alternate scenario. So we'll be looking for this structure to be an A. All right, wherever it resolves, 545, we'll look for this to be an A, and then we'll look for retracement. We'll see, I'll be able to give you an exact retracement, 50, 60% or so, or even 38%. There could be a couple different scenarios for B wave that get confusing. So we'll see where this resolves, then we can give you some retracements. But the major level, it should hold around the 127.2. That was former resistance, and then it acted as support here with the 50. And so if we start to retrace from there, we'll look at this being a pretty big area, because that's going to be right where the 20 simple moving average on the weekly is anyway. So this should become a big area. We'll map this out. So make sure you hit that notification bell because we'll map it out on the lower time frames as we resolve this situation. Now, primary scenario. It's an ending diagonal. We're going same thing. 1, 2, 3, 4. But instead of this being an A, B, C, we're going to look at this being, we'll just say A. We're looking for that B was the correction here. C is going to resolve after FOMC. And I think the 16th is Tuesday's turnaround Tuesday or so, and we have the 17th with a resolution here with the time relationship. So I'll move this arrow. I think the FOMC is going to be really volatile, and I think we might get a this to complete into Friday, and then Monday get some sort of turnaround Tuesday, and then we break down from the wedge. So I'm looking for all of this to complete here. This is our primary right now, so we can get our minds off of this here. We're looking for a top, okay? And then we'll talk about this again. This is like the 127. We'll look for, on the primary scenario, look for somewhat of a low or so here, a lower high. So this should be impulsive, a 5-wave move down, and then lower prices. Okay, and it's not going to look exactly like this, but we're looking for an impulse wave down. Okay, and so that's our time frame, and we're gonna go through this video fairly quickly. We're gonna talk about this on the 65. Again, traditional technical analysis. I think we get up to our target, and I took out all the gibberish around how we get to the target here, the 545 area. Reject off of this box and break down from this major wedge. Okay. And then again, we'll talk about where this impulse move, maybe back test, and then continue lower. That's how I'm looking at it. It's a major wedge here. Yes, wedges expand all the time. It will keep the alternate scenario in our point of view, but I want to change our mind frame to be bearish as bearish resolution starts to unfold. Okay. We can get rid of this time relationship. That's in the past. That was a good low there. And then we can actually, we'll change this to the 16th so we can have this be another reference. That's another time relationship. And notice we don't have much time. We just have a few days. Tomorrow's FOMC, and then this thing is going to wiggle around quickly tomorrow. And going to the Elliott wave, I'm going to zoom in here. We have our extensions here on this time frame. We got it from this retracement. So we did the Elliott or the Fibonacci retracement, and then we got above the 100%, and now we're into the extensions. So let's zoom in here, and I don't want the numbers to get confusing. We're going to talk about this leg here. So I've been talking about the 1, 2, 3, 4, and 5 situation with you. That's no longer how we're going to keep our mind frame, because we're looking for a top. So I don't want you to think this is a 5-wave move. It doesn't. Again, it's Elliott wave. We're going to this A. The turquoise is going to be the primary move. So this is going to be a 3-wave move up for A, B, 5-wave move up for C into a higher degree A, B, and then we're looking for a 5-wave move up to resolve this zigzag. Okay, so an A, B, C for a zigzag. And so on the lesser degree here of the C wave, we already have 1, 2 in. So 1, 2. And you see we have a 1, 2, 3, 4, and 5. So that looks good for this wave 3. I'm sorry, we have a 1, 2, yeah, possible 3. Perfect. 4. Getting a little low here, and if the low's not done yet and we make a little bit lower, it's still the same thing. You know, we shouldn't cross here unless it's an ending diagonal. This being a 1, 4 should not cross it. So you see the shallow dip here. And we're looking for 5 to resolve. Now we're looking for 5 to resolve around that 16, 5, June 16th. You have a couple little confluence there, time relationships. And so with tomorrow happening, I can imagine we, make a spike, boom, lower spike, higher. It just all depends on how you count this, but we're looking for an impulse wave. And quite simply, no matter how much it goes up and down, and you can say it's flats or expanding flats, all this is going to happen in these hourly candles are going to be just wicks, and we just want to see the resolution as the smoke clears into this target of 543 in this spot, but 545. But I think this is going to happen pretty quick. Things happening on Wednesday, maybe going to Thursday and Friday, kind of grind up here. Now, if it hits the target on Thursday, then or even on Wednesday, if we hit this target up here on Wednesday, then I think we're gonna go short when we hit this target. Okay, and the only risk that I see happening above here, we get above that 162 for some reason, and don't worry about the counts at that point. If we get above 545, this 543 and 545 zone, and hold above it and consolidate and continue higher, then something else is happening. And this is maybe this is all a 1-2, and then we're looking for a wave 3 to head higher. I think that's unlikely with the all the divergences and everything happening on the lower all the way up to the monthly time frame. I think a lot of divergences have to be resolved. So I think at minimum we get our correction, but we get above and stay above 545 zone, then we have to rethink and reevaluate what's happening here. But we're looking for a top into this zone, and we will be playing short. We'll have swings out into weeks and months, and we'll have very short-term calls within days or two to see if price can hold above here. So that's the way we hedge. That's how I trade. You have to trade the way you want to and the way you feel best. But even on these lower time frames, and we know that on the higher time frames we have all of the things happening, all the negative divergences, and so we're looking negative here. We have negative divergence on RSI, MACD. So we make a new high, we're just making another negative divergence. So even on the slow stoke, so that's how we're looking at the 65 to have a three peak. And anything else we want to? Our reversals, we're going to get back up here, probably make a lower high, because we're resolving this mini cycle here. We're resolving right now, so we're going to make another divergence as well. Awesome oscillator, we have negative divergence, higher prices, lower lows or lower highs on the awesome oscillator. See if we can get some signs of demarc. We already have a 9 count. Perhaps we get, you see we have 1, 2, 3 already. Perhaps into the expected move and above into our zone here. Maybe we'll get another 9 sell. Very similar to here. You get the 9 exhaustion. Actually a 913 there. Had a consolidation. 9 count again before we have more consolidation and actually downside. So called pretty close to a top there. So we'll count this one, see if there's some resolution from demarc. You have Bollinger Bands getting tight here. So, with the FOMC, that's going to expand. I'm going through this really quick. A lot of the indicators that I look at, we're at a shelf here. We don't have any volume up here because we've never traded up there. So that's not going to do us any good right now. it's nice to talk those things out, because if you're using these tools, then some of them will not be valid until you start looking for support levels. All right, so that's our key zone. I don't know how we're going to get there. You're not going to be able to trade up and down in these. It's just going to be too volatile. It's insane. So we're gonna hold on to the calls that we have. Even if price goes down first, we're gonna hold on to our calls. We're well out to next week, so this is all noise to us. And then as price gets to these levels, we're gonna go short and leave some and add on some very short-term calls, depending on what we decide to do. So, all right, that's how we're playing that. Qs look the same. Qs have theirs right up here at the 471. So we're looking for maybe 1, 2, 3, 4, 5 up here. And not much else to say there. Our wedge is way down lower. This is going to play out. So when we start getting our lows in SPY, when we break down from the wedge in SPY, we're not going to be broken down from this major wedge. So this is going to be a good tell of what the market does. If price gets down to here, SPY already broke the wedge, but we're going to probably get a reaction off of this one. And this is when we're going to say, hey, are we going to get a lower high? And we're back testing the wedge on SPY, but we're still in the wedge on Qs. So that's going to be something we're going to really, really keep an eye out, is when we get down to this bottom of this wedge from the bottom. So that will probably coincide with 435 in this gap area here if you trade the Qs. But I do think this all breaks down. This is not, I don't really like that one, that top there. This gets up here. This is a minor trend line, likely to break this and come down to the next. IWM. When prices, we're still looking at this as a flag and with potential left shoulder, head, right shoulder. Now, we did break the trend line, so this is bearish. We have to keep this as a caution. We're not in a IWM call right now. We had to get out of that. What's going to happen is as price goes lower, perhaps this continues to go lower as well. But as price goes lower, I do think this is going to have relative strength. And as the Qs break down, get a top, and after that plays out, and we start looking for a temporary bottom, the trend line that I was just talking about, then we'll see how this plays. We're going to need some participation from IWM in order to help the market go to the upside. It's just really been a dog, but it's not out of play yet. We're at the 62% retracement, so really this is, I have a couple numbers here, but really this is a 1-2 setup. This is a bullish setup. Came back to this is from bottom here to top here. It had a 61.8% in the golden zone retracement. So, I mean, if this starts to take off and the Qs perhaps are, we might have a split trade. We might be long small caps and short mega tech, a pairs trade. So we'll keep our eye on that. And then we're just going to wrap it up with the VIX. And Tesla resolved lower from yesterday's video, but we're still we're holding on to our longs with Tesla as well. So what's this going to look like? We're rejecting off of this point here. So this is a great reference. This is 200 simple moving average, and then you have the channel top up here. But really, we're having a hard time with this 13 zone. And if this starts to break down, that's going to allow, this is going to be elevated, I think, throughout until the minute, not the minutes, but the announcement comes out and the Fed speech. But if this starts to resolve lower, then we're gonna have some confirmation that the market is going higher. But we'll see. This might be a trend line here too. So if we hold this trend line with the VIX, then that will be, and if we're at the target for SPY and we're at the lows here, then that's a excellent sign that the top is in, and this will be the bottom. So we'll see where the VIX is, and when we get to our target, and we'll coincide that, and that will kind of give us confidence for our put trades. All right, that's how we do it. That's how we trade. We are looking for a top. Thanks for joining us here at Options Center. Don't forget to like the video and consider being a supporter. Have a wonderful day. Bye-bye.